Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, April the 1st. Well, the market started the week lower with talk of a ceasefire and a potential peace settlement. And it kept moving lower with USDA releasing their prospective planting and quarterly stocks reports on Thursday, which did weigh on the corn and soybean markets. Wheat, it did find some support, however, from the lower stock numbers, and it managed to bounce off its lows. Canola, well, it paused with soybean complex showing weakness this week. However, canola is still showing some upside potential. The equity markets, well, they finished the first quarter of the year lower, with the Dow down over 2,000 points from its January high. The S&P and NASDAQ were lower as well. However, the TSX ended the quarter higher, up over 900 points since January 1st. Our May canola contract this week, well, it finished the week down $5.50 a ton. It closed at $1133.90. The canola traded either side of unchanged on the short supply and fears of running out. Concern over some dry conditions in Western Canada is also supporting new crop prices, with November futures posting a new contract high today. However, the lower palm oil and losses in the soybean pit kept canola in check. The May soybean contract, well, it was down hard this week. It lost $1.27 a bushel, closing out at $15.83. The May corn contract, well, it was down 19 cents a bushel over the week, and it closed at $7.35. And the July Chicago wheat contract, well, it was down $1.09 a bushel and closed at $9.84. The July Kansas City wheat contract, well, it lost 93 cents a bushel on the week, and it closed at $10.14. And the July Minneapolis wheat contract, well, it held up the best, but it was still down for the week, down 37 cents a bushel and closed at $10.65. The wheat markets, well, they did back off from their contract highs, despite there being really very little fundamental changes in the wheat markets. And this is a bit of a sign that the markets are very nervous up at these levels, and that they may have a difficult time moving much higher. Our Canadian dollar this week was down marginally. It was down 29 basis points. It closed at 79.88. Weighing on the dollar, and being down very hard this week was crude oil. Crude oil lost $14.57 a barrel. It was down hard this week with the U.S. now announcing that they will begin releasing 1 million barrels a day from their reserves. And crude oil finished the week out at $99.33 a barrel, so just under $100 a barrel. For next week, well, now that the planting report is behind us, the markets will start to focus more on the weather. And now, while we do have some rain that has occurred, there is still large areas of the U.S. southern plains under drought conditions. And the threat of this expanding into the U.S. Midwest is still very real. So the crop is not certain yet, and the risk premiums will remain in the marketplace just a little longer. We'll look for canola prices to continue to move higher. Look for a move back above that $1,140 area. For spring wheat, well, the July spring wheat futures are struggling to get above that $11 area right now. So we'll look for prices just to continue to trade that $10 to $11 range. I'm Ed Baldwin with your weekly wrap-up for Friday, April the 1st.